In this video, I'm dealing with investing activities. More specifically, I'm going to be dealing with the sale or purchase of assets for the sake of the cash flow statement, right? And this is based on my investing activities here, where I already indicated that there is sale of assets, purchase of assets, increase in fixed deposit, and then decrease in fixed deposit. But I'm going to focus on the first two, that is the sale and purchase of assets for the sake of the cash flow. Okay, now, one of the mistakes that people make is to assume that when your assets go down from one year to the other, when your assets go down, some people may assume that there was a sale. And also when assets go up from one year to the other, people assume that there was a purchase. But I want to show you in this video that whether assets go up or down, it doesn't necessarily mean that it's a purchase or a sale. It can actually be both of them, the purchase and the sale. So the best way of dealing with purchase and sale of assets, this not only works for the cash flow, it will also work when you're doing note number 3, which is your fixed asset note that we're going to do later on. Your fixed asset note, which is in a separate video. So I normally say here you have to use 5 fingers, right? You have to use 5 fingers, right, when you're dealing with that. What are your 5 fingers? So you're saying carrying value at the beginning of the year, okay, plus, that's finger number 1, carrying value at the beginning of the year. Finger number 2, plus additions at cost price. Additions at cost price, that's finger number 2. Finger number 3, minus disposals at carrying value. That's finger number 3. Then finger number 4, minus depreciation for the year. This will be equal to finger number 5, carrying value at the end. So this is the best way of dealing with assets. Whether you are dealing with whether it's a sale or it's a purchase, this is the best way of dealing with it. Use your 5 fingers, carrying value at the beginning of the year, plus additions at cost, minus disposals at carrying value, minus depreciation for the year, and minus is equal to your carrying value at the end. So why is this very critical? It's very critical because normally what they do in the exam, they give you 4 of these, or they give you ways of calculating 4 of these, or the 4 of them are already provided, and you need to calculate only 1 of them. So, for example, let's say you want to calculate additions at cost, but you are given your everything else except additions. Let's say, let me just use hypothetical figures. Let's say they gave you 1,000 here, and then here it's a question mark, and then disposals, they give you 200, which is in brackets, and then depreciation, they say depreciation is 100, right? And then they say to you the balance at the end is 1,500. So in this case, they've given you a scenario where you are given everything else except your additions at cost. So what you do, you work from the bottom going up. So if you work from the bottom going up, remember this is an equal sign there. So which means these figures must change their sign. So technically, to get my additions at cost, I will have to start from the bottom by saying 1,500. This becomes a positive plus 100. This becomes a positive plus 200. This becomes a negative minus 1,000. So this will be 1.6, 1.8 minus 1,000, then it gives you 800, which means this answer here becomes what? 800. I can manipulate it as well. Let's say same principle. Let's say this one was given is 1,000. I want to use exactly the same figure so that we see that I can still get the 200 there. And then this 800, let's say the 800 is given, but disposals are not given. It's a question mark. Your depreciation remains 100, and then at the end it's 1.5. So I can still get this 200 that was provided there by using the same principle. So I work from the bottom up which means I'm going to start with 1,500. This is positive plus 100. This is a negative, right? Because it's positive here. So it becomes negative minus 800. This minus 1,000. Okay. So this is 1.5 plus 100. That's 1.6. 1.6 minus 800 leaves you with 800. 800 minus 1,000. It's negative 200. Which is that negative 200 there that you have at your disposal, by working it from the bottom going up. So when you're dealing with fixed assets, it's always advisable to use your 5 fingers so that you can get everything right. And what do? You work from the bottom going up, and then it will give you answer. You're going to see it's going to be very simple, because this question will normally be 4 to 6 marks. These are 4 to 6 marks for free. Thank you.